Hello and welcome to Stockwatch Live. Monday's trading update from WPP will be closely watched. Not so much for its own rise or fall in fortunes, more the potential downfall of its founder Sir Martin Sorrell. As much, if not more of a household name than the global advertising giant he's run for the past 32 years, everyone will be listening out for any hint of what really happened to cause his swift departure, and that independent investigation into an allegation of personal misconduct against him. So far, all anyone has to go on is that announcement about an investigation into an allegation of financial misconduct against him that was ongoing and that, quote, did not involve amounts which are material. The 73-year-old, who acquired a small Kent-based maker of wire baskets in 1985 and built it into the world's largest marketing services group, denied the allegations in a statement to media organisations, but said he recognised the company had to investigate the matter. Shareholders who watched as WPP shares slid south as the world tried to work out what Sorrell is alleged to have done or not done will no doubt be hoping for some answers on Monday. They've had a tough time of it of late. Shares in the group have lost a third of their value in the past 18 months, as big brands have cut their spending with its portfolio of creative, media buying and digital companies. In the wake of Sorrell's departure, Ford has already invited other companies to pitch for some of the business it currently gives to WPP. Now, credit rating agency Moody's has waded in and downgraded its view on the group's prospects from stable to negative. Of course, what battered shareholders will really want to know is whether WPP can survive without him. But Monday's announcement most probably comes too soon after his departure to answer that. One thing is that Mark Reed, WPP's new co-chief operating officer, certainly has a lot on his plate. Liberum Capital was undeterred in the wake of Sorrell's departure and reaffirmed its buy rating and a price target of £17.50. Numis cut its price target to £14, while Shore Capital has set its target price at £11.88. The shares are currently not far off that at £11.17. Tuesday sees first quarter results from BP. The oil giant was among the day's top performers after Goldman Sachs added the stock to its buy list with a 640p target price. It called BP one of the most interesting turnaround stories in the sector, thanks to one of the industry's strongest pipelines of new oil and gas projects. Last week, BP was the latest of the oil majors to set out its future strategy. It laid out 3 sets of plans for delivering more energy with fewer greenhouse gas emissions. These were reducing the emissions from BP's own operations, improving the performance of the products that it sells, and developing new businesses in renewable energy. Full-year results released in February were hailed by Chief Executive Bob Dudley as the oil giant's best results in recent history, and with oil prices currently trading around $73 a barrel, having touched the highest level since late 2014, BP shareholders have good reason to feel optimistic about the year ahead. The consensus view is for pre-tax profits of just under $15 billion in 2018, compared with estimates of a little over $10 billion last year. And finally, while we're on the subject of global companies, we also hear first quarter results from Just Eat. Now, it may be on a different scale to the likes of WPP and BP for now, but the food delivery service has a big appetite and equally big plans for global domination of its sector at least. In the year to the end of December, Just Eat reported revenues up 45% on the back of a 26% rise in orders. December set a new record with 10 million orders in that month alone. Investors will want to hear more about Just Eat's international businesses. These grew 75% in the full year and generated 44% of total group revenue. The business is acquisition hungry, but that doesn't come cheap. While the core of the international business came from Canada and the recently acquired Skip the Dishes brand, the bill for acquisitions came to £191 million, pushing the company £76 million into the red. Berenberg, though, rates the shares a buy, but has cut its share price to 840p, while Morgan Stanley cut its price target to 780p. However, Goldman Sachs has a target of £10.10 on the shares. Well, that's all we've got time for. For more information on the other companies reporting in the week ahead, go to Stockwatch in the Markets and Insights section on fidelity.co.uk. Thanks for watching.